Kaspa Crypto is up an incredible 8,000% since the end of 2022, leaving many of us to question whether we should be invested in proof-of-stake blockchains like Sui or invested in proof-of-work blockchains like Kaspa. In this video, we're going to identify the main differences between these different types of blockchains and also understand why Kaspa became such a success. We're then going to use that information to identify a new coin that's coming out soon that many have labeled as a potential Kaspa killer. Hit the like button and let's get into today's video. Now guys, Kaspa, as you can see, has been absolutely surging to the upside, achieving nearly 8,000% gains at current prices from what it did back at the end of November 2022. So before we dive in to the other coins and the other ecosystems, which I think after seeing what's happening to Kaspa, you're going to want to hang around for, we need to understand what it was that really drove the success for Kaspa. And you don't really have to look too far. You go across to YouTube, you go across to Twitter, everyone's talking about Kaspa. Why? Well, because Kaspa is a proof-of-work blockchain. And more recently, well, you might have seen the rise of Sui and Solana and Avalanche and other popular chains out that boast huge number of transactions per second. Proof-of-stake is kind of away from the original plan that Satoshi Nakamoto had when he wrote the Bitcoin white paper. In that proof-of-work is basically achieved through mining, and if you're willing to support the network by lending your computation power and energy, then you will earn rewards for that based on how useful you are to the network, i.e. how much computational power you have. On the flip side, proof of stake, which has been seen by many to be a much more efficient model, rewards validators for holding a stake. This allows for incredibly high throughput, but is questioned by many as whether or not it can be secure or not, because in proof of work you would need to supply over 51% of the energy that is taken to run the network, but in proof of stake, by owning large portions and staking it, you can then have a huge impact on the potential way that the blockchain runs. Now, obviously, there is more technical videos out there. I'm not the most technical, and if you're newer to crypto, you're probably not the most technical either. Therefore, I'm just trying to simplify it for you. If you want more in-depth, deep, techie stuff, then I recommend going and searching for it afterwards. But we're really having a look at broad brush here. The main difference is as the consumer, as the investor looks at them, because ultimately, we're here to invest. We're here to make some money, hopefully. Right? But anyway, all that aside, the people got behind Kaspa because it was true to crypto. They loved the concept of what Kaspa was trying to deliver. But how did Kaspa do this compared with Bitcoin? Well, many of these Kasparians, or whatever they've decided to call themselves this week, have decided that Kaspa is a better version of Bitcoin. Which is a pretty bold statement. Now, Bitcoin is the original blockchain, right? So you have a page of transactions, or like a ledger, which is basically connected to the next page of transactions, or the second ledger. This basically means that each of these ledgers is a block, and each of the connections is basically the chain. And this obviously fully decentralized with miners operating all over the world, can't be affected by bad actors, etc. It was obviously brilliant, which is pretty slow because obviously it takes around 8 minutes for each block to reach finality, and there's only a certain amount of transactions that can go onto any given block. Also, this therefore makes it very expensive, means that Bitcoin can't be used as decentralized cash, which maybe it was originally looked at, but can be used as digital storage of value, making it like the digital gold. Okay, Kaspa now probably looks at being the more digital silver. Okay, Kaspa also works by being a decentralized, GPU mineable, proof-of-work blockchain. But it's the unique DAG structure, which is a direct acyclic graph, that gives Kaspa the ability to be much more efficient than Bitcoin. This basically works by reducing the number of orphan blocks created and adds the overall efficiency, allowing Kaspa to work up to being able to complete around 2,000 transactions per second. Which is obviously significantly faster than Bitcoin at around 8 or 9 transactions per second. So everyone basically thought, well, Bitcoin can go from 0, and it can go all the way up to like $74,000, or whatever it did earlier on this year. Maybe Kaspa has the potential to do it, and that's what the main speculation is around. But many then said, well, yeah, but the proof-of-stake blockchains are getting way more volumes on them. And if you come across to DeFiLlama.com, it's fairly true, right? Solana currently sits here. In terms of daily volume, you've got $1.16 billion, which is pretty damn big. You got Ethereum, which was proof of work, that then went to proof of stake, with a volume of $767 million. Tron, you can see $41 million. Sui, the kind of the new kid on the block, now $90 million. AVAX, around $40 million. You get the picture. Why? Well, all of these proof-of-stake blockchains not only have much faster transactions, but they also benefit from being smart contract compatible. Up until very recently, Kaspa was limited. It didn't have smart contract capability until recently when they introduced KRC20. Now, KRC20 is basically EVM compatible and allows for smart contracts to be built on Kaspa, which means that you now have the ability to build DeFi projects, meme coins, and all that other good stuff onto Kaspa and benefit from that proof of work security, decentralization, but without having to sacrifice too much in the speed and capability. Whew. Hopefully that all makes sense and that is all clear. Okay, so the main driver behind Kaspa so far hasn't been all the volume and transactions that you've seen in the proof of stake blockchains, but it's been mainly the fact that it could be the kind of Bitcoin killer. It's seen of like a kind of a thoroughbred of the crypto world, and it's been mentioned on the Ethereum white paper. The team is very impressive, and also the tech behind it all pretty cool. Okay, also many out there are like, it's not a VC coin like many of the others. It's very fair launch. You're right, it is fair launch. Fair launch basically means that they were mining, and there was fair mining going on at the start, allowing new people to enter into the network to be able to mine tokens. But contrary to many people's belief, and you can go and look this up, they did actually receive funding from Polychain Capital in the very early days, which is basically used to pay the team, pay for the developments going on, and also to build out miners and things like that to be able to keep the network up and running. But obviously, in my opinion, VCs aren't a bad thing. They are an essential thing because the VCs are actually going to be the ones who are investing in periods of time right now and starting to drive the markets. So is Kaspa the best proof of work that we should be investing in right now? Well, there's two things to consider. Kaspa is already up 8,000%. Usually, that means that you're probably not going to see those types of returns going forward because it's already up 8,000%. And also, something to consider is this. So go across to dropstab.com, you can see that versus most of the other popular blockchains that are out there right now, obviously there is a lot more, but Kaspa, you can see, is down in the last week when you got like Solana up 7%, Ton's up, Sui's up in the last week, probably more than most. And in terms of like FDVs and things like that, you can see there's no real kind of FDV being gained on Kaspa. Yes, they introduced the new KRC20 part, but if you come across to CatScan, you can see that there's been around 28.8 million transactions, and there's been a lot of like different tokens kind of created, but not necessarily a huge amount going on. And also you can see Kaspa versus like US dollar, BTC, ETH, DeFi blockchain is all kind of in the red over the last kind of 7 days, 1 month, in fact. So maybe people are losing their interest in Kaspa, which isn't necessarily a bad thing, okay? But those people losing their interest will start to look to invest in other areas. And if they like Kaspa for those things that were kind of backing up in the first place, like the proof of work part, then maybe there's another opportunity. Because ultimately, when we think about blockchain technology, what we really are looking at is basically moving to a decentralized world. The whole point of crypto was to be decentralized, to give ownership back to the people. Okay, and this is what many people out there are very passionate about, and many people believe is the future. Now, another proof of work blockchain that also had a very successful launch in the early days was in fact Kadena. And you could see, again, by harnessing that kind of belief in the proof of work blockchain, you can see massive growth that went on here, again, achieving nearly 8,000% in the early days. Now, by no means, guys, am I suggesting that Kaspa is going to die a death quite how Kadena died a death in the last bull market, because that was like the top of the bull market. Okay, any coin will tend to hit highs in bull markets and then drop into lows. Across crypto, this is very common, but this is also a bit of a problem that the next crypto I'm going to talk about is going to fix. Now, why is it a problem? Well, because in proof of work, mining tokens and things like that is not necessarily the most efficient thing to do at different times of a bull market and a bear market. Why? Well, because my rewards are paid in like Bitcoin, for example, or Kaspa. Therefore, if Kaspa's going up a lot, I'm happy to be mining Kaspa. But if Kaspa comes down in the same way that Kadena does, why the F would I want to mine Kadena or Kaspa if it goes down, or Bitcoin? Okay, it means that I go out of business because I can't afford to pay my electricity bills, and proof of work doesn't work anymore. And that's where Kwai Network comes in. Now, Kwai Network is very interesting because it kind of solves a lot of the problems of the proof of work ecosystem of the fluctuating markets. And it does that by having two separate tokens. Now, Kwai Network isn't yet launched, but there is a way that you can actually start to participate in testnets and things like that and earn rewards. And I'll talk about that in just a moment, how you can actually start earning Kwai tokens before even getting started. Now, Kwai, much like Kaspa, is a GPU mineable proof of work blockchain. However, Kwai is still in the testnet phase and has already managed to reach 2,500 transactions per second. It does it in a different way. It doesn't use that DAG structure that Kaspa uses. In fact, it uses this instead. Okay, this is a very simplified version. Okay, for my very non-technical mind, hopefully get my mind around, and hopefully it's going to help you as well. Okay, so basically the blockchain is sharded. It creates lots of different shards of blockchains to be able to complete effectively, infinite amounts of transactions. Not only that, but unlike Kaspa that launched without having EVM compatibility, Kwai is already EVM compatible, which allows for different types of projects to be able to build on their chain. Now, they're actually starting to work to gear towards things like DeFi and DePIN, and something that I'm very passionate about and I think is actually pretty much the future of crypto in general, which is decentralized physical infrastructure networks. Basically, everything you can think about, you can contribute to the network, you can earn rewards, and everyone gets a far better service in the interim. For example, you're out and about in another country, you're supposed to be having a Tinder day, okay, with this like fantastic 10 out of 10 that you are really, really excited about, but you can't find the cafe anywhere, okay? So you have this best date and you know that she's not going to wait around for you because she's a 10, okay? And your network drops out, you haven't got any Wi-Fi. But luckily, there's someone else who's providing their 4G, 5G, back to you, and you just pay them a couple of like tokens so that you can basically get online, you can get to this cafe and you have your date, okay? DePIN allows each of us to contribute our excess like Wi-Fi data back to the network so that someone else in need can use it. It allows us to use our kind of car. If we've got a car spare that we don't really drive that much, I'm allowing someone else to go and just like drive that car and rent it. And without having to go through some sort of like elaborate rental agency, it's all connected through the blockchain and I'll earn my rewards. Maybe I've got a charging point for my car. Maybe I can feed electricity back into the grid and earn points back for it. This is DePIN, okay? Just to make it clear, and lots of these different projects are being built up right now, okay? And Kwai Network effectively could be the blockchain that supports all of these different things. Now, according to the Kwai white paper, using the sharding method, Kwai can achieve up to 250,000 transactions per second, making it suitable for a bunch of different functionality. Now, on to the major difference between Kaspa and Kwai. Kaspa has one token. So when you're mining that token, you know, it goes up in price, it goes down in price, depending on what's happening on Kaspa. We've talked about the problems with this earlier. Now, Kwai basically solves this problem in a slightly different way. It has two different tokens. One, which is the Kwai token, which is basically the store of value token that is expected to go up and down with bull markets and bear markets. But also it has another token called Qi. Now, Kwai, which effectively means money in Chinese, is the store of value. And you also have Qi, which is the forever inflationary currency of the network, which is basically priced in a stable price. Now, unlike other stable coins like USDC, USDT, it is not tethered to a US dollar or a currency. It is tethered to energy prices. This is quite interesting, okay, because it means that as the prices of energy fluctuate around the world, depending on the performance of the economy, it means that this token will fluctuate with the economy rather than fiat money, which is very interesting and very cool, slightly different, okay? And this means that if you're mining, that your rewards will remain consistent because you can either get paid in like Kwai if you think it's in a bull market, or you can switch and get paid in Qi if you think we're going down into a bear market. And then you can transact between the two, okay? So it's basically like having an earnings account and a savings account, and you can use these two different tokens independently. Now, there's this interesting Medium article which you can find by going through the Kwai website, which kind of helps you understand a little bit more about this kind of like 21st century money. If we believe that like Michael Saylor's right and the US dollar is actually going to completely collapse, then why would we want to hold a stable coin that is pegged to a US dollar? Okay, we want to have a fully decentralized world online, okay, where we have all of our money and everything crypto. Then we need to have something effectively that is pegged to something other than a US dollar that is also stable, okay? This is a very, very interesting concept for me because the energy dollar, which is effectively what this is going to be very, very exciting indeed. So here you can see Kwai, which is Chinese for money, and Qi, which is Chinese for energy. And obviously, you could dive into this in a whole lot more detail. Obviously, there's a very technical project that kind of underlines all this. But effectively, it solves the proof of work problem, which up until now was kind of a lack of speed, lack of efficiency. So it can have incredible transaction volume. It also solves the problems of bull markets and bear markets and boom and bust cycles by having two different separate currencies, and is a true scalable proof of work blockchain. Now, Kwai is also MEV or MEV resistant, which is quite important, okay? MEV are basically bots that are used by individuals to extract value from transactions. So a bunch of different transactions are sent all the time between these different bots and individuals. Now, these MEV bots basically front running you to extract value, okay? So they cost you more money for your different transactions like that, and a few individuals are just making money off the back of it. Okay, so again, Kwai are looking to all these different like areas to become more efficient, to try and solve all of the issues within crypto. Okay, it's not an easy thing to do, and many layer ones are promising to do it, but many haven't done it yet. They also have a grants program where they're using funds to support development on their chain, because again, if you look at the success of other projects right now, okay, the success, you go across to DeFi Llama, you can see the success of the layer ones. It is not necessarily about just kind of the hype and excitement behind the layer one, okay, the trading, the sending of cash and capital. Why? Well, because at the moment, if I want to send crypto to someone else, I send USDT. I'm not sending Kaspa, right? Why? It's just easier for me to send USDT because I can keep it in stablecoin and I can send it whatever. And it already knows the value. I don't have to get out my calculator. Okay, so it has to be able, as a chain, to support other ecosystems growing on it. Okay, that's going to give it its success. Okay, Solana, you can see, has had huge amounts of different projects that are growing on Solana. You can see why Solana is going up in value, because all of the projects that are built on Solana are going up in value. You can see the SUI is going up in value because all of the projects built on SUI are going up in value. It's no mystery. Okay, so if you want me to deep dive Kwai in a whole kind of Kwai video, I wanted to keep this kind of like broad brush and casual, then let me know down below in the comments and I'll see what I can do more. But in the meantime, I recommend getting across to this website, guys. Very smart looking website, lots of things you can go and learn about it. So right now, Kwai is not live. Okay, the token should be released soon, and therefore you can go and look into it. But if you want to be able to start accruing points that you can get tokens for, then head across to Twitter. Now, on your way over to Twitter, give me a follow. Link down below in the description, because I'm going to retweet this particular post, which is from Kwai Network. Okay, you can see Golden Age test launches on the 15th of October, which is just around the corner, and it's the first ever gamified testnet from the Kwai Network. And they will have around $10 million in mainnet Kwai tokens up for grabs. So basically what you can do is you can mine Kwai tokens. Now, interestingly, you could have started mining Kaspa tokens and all sorts of different things for your GPU power on your computer, your phone, over a period of time. This is really cool because it allows to, one, decentralize the network further, but also allows you to earn points, earn tokens before the tokens are even live that could potentially be worth a lot of money down the line. You can also help by developing on the Kwai network. If you're a developer, you can also trade and speculate on different tokens within the ecosystem, and you can use different arbitrage tokens. What does that mean? Well, it means you can buy between the Kwai and the Chi token, moving your money from one side to the other and making gains that way. And basically you can support the network in doing this, earning yourself some passive rewards. So guys, you can see I've reposted that there. You can go and check it out. Now guys, to be clear, this is a completely objective video. I'm not sponsored by Kaspa. I'm not sponsored by Kwai. I'm not sponsored by SUI. I'm not sponsored by any of these crypto projects that I talk about. When I'm sponsored, I'll tell you. Now, this video is in partnership with MEXC. And why is that? Well, because MEXC is the exchange I use most of the time, okay? Has over 4,500 different crypto coins and the lowest fees across crypto. It's 0%. It is free to trade crypto through my MEXC link down below. Now you can see you get $8,000 USDT bonus if you sign up through that link, which is really cool. Okay, but what is actually the coolest about this right now is the token airdrop functions. And you can get these token airdrops by participating in various different tasks, okay? So different social functions, you can get Catty tokens, which was the Catterton token that launched the other day. And they were also giving away up to $70,000. You can see you can get LogX and various other big launches that are happening all the time. I met the MEXC team in Singapore, and they said that they were going to go to extra lengths to be able to get some of the biggest launches coming up. So if you want to be able to get onto big launches for the likes of Kwai Network, I'm not confirming that they're on MEXC or not, I don't know yet, then make sure you're signing up through my link down below to get onto MEXC, guys. It's the exchange that I use pretty much every single day. It has every crypto that there is to pretty much one. It has the lowest fees all across crypto. Guys, I hope you enjoyed that video today. Maybe, just maybe, we found another proof of work blockchain that has the opportunity to see similar returns to what we've seen on Kaspa. Who knows? Obviously, nothing I've said is financial advice. Go and do your own research. Hit the like button. If you're new to the channel, subscribe, and I'll see you very soon in another video. Bye-bye.